Hello, welcome to Virtual Learning Network. We will be studying Unit 1 of Basic Concept of Accounting. The topic which we are going to cover are Introduction about Basic Accounting, an Overview of Accounting, Basic Accounting Concept, System of Bookkeeping, Definition of Accounting, Classification of Accounts, Rules of Debit and Credit, Accounting Process. So, let's begin with Introduction of Accounting. Accounting is a business language. We can use this language to communicate financial transactions and their results. Accounting is a comprehensive system to collect, analyze, and communicate financial information. Moving on to the objective of accounting. First is to maintain systematic records. Accounting is used to maintain systematic records of all financial transactions like purchase and sales of goods, cash receipts and cash payments, etc. It is also used for recording various assets and liability of the business. Second is to ascertain net profit or net loss of the business. A businessman would be interested in periodically finding the net result of his business operations, whether the business has earned profit or incurred some loss. A proper record of all income and expense help in preparing a profit and loss account and ascertain the net result of business operations during a particular period. Third is ascertain the financial position of the business. The businessman is also interested in ascertaining the financial position of his business at the end of a particular period. How much is owned and how much it's owned to other. He would also like to know what happened to his capital, whether it has increased or decreased or remained constant. A systematic record of assets and liability facilitate the preparation of position statement called balance sheet, which provide the necessary informations. Fourth, to provide accounting information to interested parties. Apart from owners, there are various parties who are interested in the accounting information. These are bankers, creditors, tax authorities, prospective investors, etc. They need such information to assess the profitability and the financial soundness of business. The accounting information is accumulated to them in the form of an annual report. So, move on to definition of accounting. So, according to American Institute of Certified Public Accounts, the art of recording, classifying and summarizing in a significant manner and in terms of money, transactions and events which are in part at least of financial character and interpreting the result thereof. So, here we discuss about advantages of accounting. So, very first advantage is replace memory. Since all the financial events are recorded in the books, there is no need to rely on memory. The books of accounts will serve as historical records. Any information required at any time can be easily had from these records. Second point is provide control over assets. Accounting provides information regarding cash in hand, cash at bank, the stock of goods, the amount receivable from various parties and the amount invested in various other assets. Information about such matter help the owner and management to make use the assets in the best possible way. Third point is facilitate the preparation of financial statement. With the help of information contained in the accounting record, the profit and loss account and the balance sheet can be easily prepared. This financial statement enable the business to know the net result of business operations during the accounting period and the financial position of the business as at the end of the accounting period. Number 4, meet the information requirements. Various interested parties such as owner, lender, creditors, etc. get the necessary information at frequent intervals which help them in their decision making. Number 5, facilitate a comparative studies. With the help of accounting information, one can compare the present performance of the enterprises with that of its past and with that of similar organization. This enables the management to draw useful conclusions about the business and make efforts to improve the performance. Number 6, assist the management in many other ways. The accounting information provide the management help them in taking rational decisions and in planning and controlling all business activities. There are some limitations of accounting system. Number 1, records only monetary transactions. Number 2, effects of price level accounting is not considered. Number 3, no realistic information due to concept. Number 4, personal bias of accounts affect accounting statements. Number 5, permit alternative treatment, lack of uniformity in accounting principle. Number 6, no real test of managerial performance as it can be manipulated. Historical in nature, not helpful in price fixation, cost control not possible, technical subject. So, what is bookkeeping? Bookkeeping is the making of routine records in prescribed from and according to set rule of all events which affect the financial state of the organization. This recording of transactions may be done according to the two system, single entry system and double entry system. You have learned that many people are interested in examining the financial information provided in the form of profit and loss account and balance sheet. This helps them to study the present position of business, to compare its present performance with that of its past year, to compare its performance with that of similar enterprises. Now, let us see who such parties are and how accounting information is useful to them. Number 1 is owner. Owners contribute capital and assume the risk of business. Naturally, they are interested in knowing the amount of profit earned by their business and so also its financial position. If, however, the management of the business is insured to paid managers, the owners also use to accounting information to evaluate the performance of the managers. Number 2 is managers. Accounting information of emanates used to managers. It helps them to plan, control and evaluate all business activities. They also need such information for making various decisions. Number 3 is lenders. Initially, the funds are provided by the owners, but when the business requires more fund, they are usually provided by banks and other lender of money. Before lending money, they would like to know about the solvency of the enterprises, so as to satisfy themselves that their money will be safe and repayment will be made on time. Creditors. Those who supply goods and services on credit are called creditors. Like lenders, they too want to know about credit worthiness of the enterprises. This helps them to determine the limits up to which credit can be granted. Next is prospective investors. A person who wants to become a partner in a firm or a person who wants to become a shareholder of a company would like to know how safe and rewarding the proposal investment would be. The next is tax authorities. Tax authorities of the government are interested in the financial statement so as to assess the tax liability of the enterprises. Last is employee. Employees of the enterprises are also interested in knowing the state of affairs of the organization in which they are working, so as to know how safe the interests are in that organization. Next is accounting. As we know, it today has evolved over many centuries in response to the changing economic, social and political conditions. The economic development and technological improvements have resulted in an increase in the scale of operations and the advent of the company from the business organization. This has made the management function more and more complex and increased the importance of accounting information. Branches of accounting. Number 1 is financial accounting. The purpose of this branch of accounting is to keep a record of all financial transactions so that the profit earned or loss incurred by the business during an accounting period can be worked out. Number B. The financial position of the business as at the end of the accounting period can be ascertained. And number C. The financial information required by the management and other interested parties can be provided. Financial accounting is mainly confined to their preparation of financial statement and their communication to the interested parties. Number 2 is cost accounting. The purpose of cost accounting is to analyze the expenditure so as to ascertain the cost of various products manufactured by the firm, fix the price. It also helps to controlling the cost and providing necessary costing information to management for decision making. Next and last one is management accounting. The purpose of management accounting is to assist the management in taking rational policy decisions and to evaluate the impact of its decisions and action. Example of such decisions are pricing debtors, make over buy decisions, capital expenditure decisions, etc. This branch of accounting is primarily concerned with providing the necessary accounting information about fund, cost, profit, etc. to the management, which may help them in such decisions and also in planning and controlling business operations. Next is advantages of accounting. So number 1 is replace memory. Since all the financial events are recorded in the books, there is no need to rely on memory. The books of account will serve as historical records. Any information required at any time can be easily had from these records. Next is provide control over assets. Accounting provide information regarding cash in hand, cash at bank, the stock of goods, the amounts receivable from various parties and the amount invested in various other assets. Information about such matter help the owners and the managers to make use of the assets in the best possible way. Number 3 is facilitate the preparation of financial statement. With the help of information contained in the accounting records, the profit and loss account and the balance sheet can be easily prepared. This financial statement enables the business to know the net result of business operations during the accounting period and the financial position of the business as at the end of accounting period. Meets the information requirements, various interested parties such as owner, lender, creditors, etc. get the necessary information at frequent interval which help them in their decision making. Next is facilitate a comparative studies. With the help of accounting information, one can compare the present performance of the enterprise with that of its past and with that of similar organization. This enables the management to draw useful conclusions about the business and make efforts to improve the performance. Next is difficult to conceal fraud or theft. It is difficult to conceal fraud, theft, etc. because of the periodic balance of books of accounts. Further, in big organization, the bookkeeping work is divided among many persons, which minimize the chance of committing fraud. Next one is tax matters. The government levies various taxes such as custom duties, excise duties, sales tax and income tax. Properly maintain accounting records will help in the settlement of all tax matter with the tax authorities. Next one is ascertaining value of business. In the event of sales of a business firm, the accounting records will help in ascertaining the correct value of business. Next one is act as reliable evidence. Systematic record of business transactions is generally treated by court as good evidence in case of disputes. So, here we discuss basic accounting concept. First one is the business entity concept. The business entity concept states that the transaction associated with a business must be separately recorded from those of its owner or other business. Doing so required the user of separate accounting records for the organization that completely exclude the assets and liability of any other entity or the owner. Next one is money measure concept. In accounting, also known as measurability concept, means that only transactions and events that are capable of being measured in monetary terms are recognized in the financial statement. Next one is objective evidence concept. Objective evidence is physical evidence that someone, when reviewing an audit report, can inspect and evaluate for themselves. It provides compiling evidence that the review or audit was actually performed as indicated and that the certain for the audit review was upheld. Next is historical record concept. The historical cost principle states that business must record and account for most assets and liability at their purchase or acquisition price. In other words, business have to record an assets on their balance sheet for the amount paid for the assets. Next one is cost concept. The cost principle is one of the basic underlying guidelines in the accounting. It is also known as the historical cost principle. The cost principle requires that assets be recorded at the cash amount at the time that an asset is acquired. Last one is dual accept concept. Dual accept concept, also known as duality principle, is a fundamental convention of accounting that necessitates the recognition of all aspects of an accounting transaction. Dual aspect concept is the underlying basic of double entry accounting system. Next is system of bookkeeping. Bookkeeping, as explained earlier, is the art of recording business transactions in a systematic manner. Broadly, there are two systems of bookkeeping: double entry and single entry system. The double entry system is accounting or a bookkeeping means that every business transaction will involve two accounts. For example, when a company borrows money from its bank, the company's cash account will increase and its liability account, loan payable, will be increased. Next is single entry. A single entry bookkeeping system or a single entry accounting system is a method of bookkeeping relying on a one-sided accounting entry to maintain financial information. An accounting is a summarized record of all transactions relating to a particular person or thing or an item of income or expenses. It is vertical, divided into two levels and resembles the shape of the English alphabet T. All business transactions are broadly classified in three categories. Number 1 is those related to a person. Number 2 is those related to a property or assets. Number 3 is those related to a income and expenditure. Thus, three classes of accounts are maintained for recording all business transactions. They are personal account, real account, and nominal account. Real and nominal account taken together and called impersonal account. A personal account is an account for use by an individual for that person or need. It is a relative term to differentiate them from those accounts for corporate or a business use. Real account. Every business has some assets and every asset has an account. Thus, assets account is called a real account. Next is nominal account. This is an account recording the financial transactions of a business in a particular category rather than with a person or other organization. For example, wages account, salary account, etc. To record the business transaction, first of all, we have to create the account head as per the nature of the business transactions. There is a golden rule in recording the business transactions, that is, one account is to be debited and other account is to be credited. Account to the classification of accounts, we follow the following golden rule for recording the transaction. Rule for personal account: debit the receiver, credit the giver. Example: cash paid to Mr. X. In this case, Mr. X will be debited because he is a receiver. Suppose we purchase the goods from Mr. X. In case, Mr. X will be credited since he is the giver of the goods. Second is rule for real accounts. Debit what comes in, credit what goes out. Example: in above example, we paid cash to Mr. X. In this case, the cash will be credited because cash goes out. In case of goods purchased from Mr. X, the purchase or goods account will be debited. Since the goods come in, goods and cash are real accounts. Next is rule for nominal account. Debit all expenses and losses and credit all income and gains. Example: rent paid in cash. Rent is an expenditure, that is why rent account will be debited. In another case, interest received from bank. In this case, interest will be credited since the interest is income. Thus, it is a simple theory of double entry system that one account is to be debited and other account is to be credited, but total of debit and credit of all entries must be equal. So, here is the accounting process. Number 1 is recording. The journal ledger contains all entry from both the journal and special journal. Using a double entry system to record transactions, keep the accounts in a balance. The accounting requirements that each transaction be recorded by an entity that has equal debit and credit is called double entry process. Classifying. The second stage consists of grouping and transactions similar nature and posting them to concerned account in another book called ledger. For example, all transactions relate to a cash is posted to cash account and the transaction relate to different persons are entered separately in accounts of each person. The objective of classifying the transaction in this manner is to ascertain the combined effect of all transactions of a given period in respect of each account. For this purpose, all accounts are balanced periodically. Next is summarizing the transaction. The next step is to prepare a year-end summary known as final accounts. But before preparing the final accounts, we prepare a statement called trial balance in order to check the arithmetic accuracy of the books of account. If the trial balance is tails, it means that the transaction have been currently recorded and posted into a ledger. Then, with the help of the trial balance and some other relevant information, we prepare the final accounts. The objective of preparing the final accounts are to know the net result of business activities and to ascertain the financial position of the business. The final account consists of an income statement called trading and P&L account and a position statement called balance sheet. The trading and P&L account give us the information about the amount of profit made or the loss incurred during the year, and the balance sheet show the position of assets and liability of the business as at the end of the year. In the business, A number of transactions take place every day. It needs to be recorded. The recording of business transaction in a systematic manner is the main function served by accounting. It enables us to ascertain the profit and loss and the financial position of the business. It also provides the necessary financial information to all interested parties. The process of identifying, measuring, recording, classifying and summarizing the transaction and analyzing, interpreting and communicating the result thereof. The accounting system has two stages: bookkeeping and accounting. The accounting process is divided into four stages: recording the transaction in the books of original entry, classifying the transaction, summarizing the transaction, interpreting the result. That's all for this unit. Thank you so much.